So we're gonna maybe start with Mark Minervini's book today. Trade like a stock market wizard, chapter 4. Values comes at a price. In the stock market, what appears cheap could actually be expensive, and what looks expensive or too high may turn out to be the next performance stock. The simple reality is that value comes at a price. So the next section, the PE ratio is often overused and misunderstood. The standard PE ratio reflects historical results and does not take into account the most important element for stock price appreciation, which is the future. If a company reports disappointing earnings that fail to meet or beat the estimates, analysts will revise their earnings projections downward. As a result, the forward-looking denominator, the E in the PE, will shrink. And assume the P remains constant, the ratio will rise. This is why it's important to concentrate on companies that are reporting strong earnings, which then trigger an upward revision in the earnings estimates, and strong earning growth will make a stock better value. So, that's, when looking at the P, that's what, he's thinking about. Bottom fisher's bliss. So when quarter results are finally released and a company misses analyst estimates or report a loss, the PE moves back up. In some cases, it skyrockets, which may cause the stock price to adjust downward even further. This was the case for Morgan Stanley in late 2007. The stock price fell and drove the PE to a 10-year low. And it later reported disappointing negative year-over-year earnings comparisons, and the PE still soared to more than 120 times earnings. And then they also look at the decline was an industry-wide financial crisis, and by 2008, the PE ratio of Bank of America, Citigroup, AIG all hit 10-year lows, along with those of many others in the banking and financial sector. Within 12 months, all three plunges more than 90%. So looking at PE is not, basically what it's trying to say is looking at PE is not the best way to, to trade a stock, especially if there's, something happening in the industry, right? Yeah. So you talk about the chip trap. Don't pass on high PE stocks. Okay. So in many cases, stock with super performance potential will sell at what appears to be unreasonably high PE ratio. This scares away many amateur investors. If you find that something new and exciting is going on with the company, there's a catalyst that can lead to explosive earnings growth, it's even better if the company or business is misunderstood or underfollowed by an analyst. Many of the best growth stocks seldom trade at a low PE ratio. In fact, many biggest winning stocks in history trade at more than 30-40 times earnings before their largest events. So that's very interesting. The really exciting, fast-growing companies with big potential are not going to be found in the bargain bin. You don't find top-notch merchandise at a dollar store. As a matter of fact, the real great companies are always going to appear expensive, and that's precisely what investors miss out. So, yeah, high PE doesn't mean it's not a good value. Wall Street has little idea what PE ratio to put on companies growing at huge rates. It's extremely difficult, if not impossible, to predict how long a growth phase will last and what kind of deceleration will occur over a particular time frame when one is dealing with a dynamic new leader or industry. In June 97, I bought shares of Yahoo when the stock was trading at 938 times earnings. That's really high, 938. Talk about a high PE. Every institutional investor I mentioned the stock to say, no way, Yahoo? People making fun of it. The company was virtually unknown at the time, but Yahoo was leading a new technological revolution, which is the internet. The potential for what was then a new industry was widely misunderstood at the time. Yahoo shares advanced an amazing 7,800%. That's a lot. In just 29 months. And PE expanded to more than 1,700 times earnings.
Wow.
If you look at that chart, he started buying when it was 938 times. And that was back in 97. And at the peak of 2000, like 99 December, on that chart, it shows it has PE 1,700 times. So, yeah, so it's important to understand that, you know, high PE doesn't mean it's not good value. It really depends on what the company is doing at that time. Yeah, he also talked about another example, Taser. January 9, Minervini bought Taser, a company that makes Taser guns, non-lethal weapons for police departments. He spotted its potential, and he then wrote the stock up 121% in 6 weeks. Again, on the chart there, it shows how the PE went to 230 times. It's not cheap for sure from a PE's perspective, so it still can grow. AIG, so this is the opposite example he used. AIG appeared to be a bargain when it hits its 10-year low in early 2008, but the stock still fell 99% by the end of the year. So low PE doesn't mean, you know, it's a good value, right? So it really depends on what's happening. There's a reason a Ferrari costs more than a Hyundai. The top 100 best performing mid-cap and small-cap stocks of 1996 and 1997 had an average PE of 40. That PE grew to an average of 87 and a median of 65. Relatively speaking, their initially expensive PEs turned out to be extremely cheap. These stocks had an average gain of average gain of 421% from buy point to peak. That's about 4 times. The PE of the S&P 500 ranged from 18 to 20 during that period. So he gave more examples about how CKE restaurant emerged to new high ground. Right before its breakout, it has a PE of 55, which is 2.9 times the S&P PE of 18. The company scored triple-digit growth in 2 most recent quarters. And Carl's Jr. Burger shops increased. That's the brand. Increased profit by a whooping 700% from year ago levels in the upcoming quarter. And then the stock climbed for 103 weeks. That's like almost 2 years. Yeah.
Wow.
It peaked at $41, October 1997, 412% gain. So, yeah. So, it averaged a spectacular 175% growth in earnings from 1995 to 97. So, like average, that's the average. And its PE actually fell to 47. Initially it was 55. It fell to 47 because of how fast the earnings are growing. So, he gave another example below. Apollo Group. It was this was from mid-2001 to 2004. The PE was virtually unchanged. Why did the PE remain at the same level as it was several years earlier, though the stock price soared? Because earnings kept pace with the stock's price appreciation. If the company can deliver strong earnings as fast or even faster than its stock price appreciate, then an initial high valuation may prove to be very cheap. So, Apollo beat Wall Street estimates for 45 consecutive quarters. As you can probably imagine, this led the company's stock price to super performance status. From 2000 to 2004, Apollo's group stock advanced more than 850%, so 8 times the money in 4 years. During the same period, the Nasdaq was down 60%. So that was, quite interesting because it was during like the bear market, right? The next example was Crocs Mania. The PE ratio for Crocs contract from April 2006 to October 07. So that was during when earnings grow faster than the stock price appreciation. It was trading at 60 times earnings, the most expensive PE in its history. You could have reaped a return of 700%, which is 7 times your money, in only 20 months. If you have waited for the stock to trade at a more reasonable valuation and bought when the stock traded near its historical low PE, so this is now on the other side, when it actually starts to drop, you would have lost 99% of your capital in 1 year. So that was after the crash in 08. So it actually lost 99%. So that's a good example, I think, because it can go one way, which is the earnings keep growing really fast, so then the PE actually keep going lower, and then on the other side, the earnings are actually decreasing and the PE actually going up, and the capital, like the price, actually start to go down. So next section, value doesn't move stock prices, people do, right? So value doesn't move, so people do place buy orders. Value is only part of the equation. Ultimately, you need demand. Only the perception of value can influence people to buy, not the mere reading of a valuation metric. Without a willing buyer, stocks of even the highest quality companies are worthless piece of paper. The sooner you realize this, the better off you will be as a speculator. In search of value, Wall Street commonly use, actually I need to read the bold part, concluding that a stock is overvalued because it sells for 65 times earnings is like saying that a Van Gogh painting selling at 49 million at auction is overvalued because the paint and canvas cost only $40. That's a very good analogy. Wall Street commonly used two measures for valuing stocks: comparing the stock PE ratio with that of respective of its industry group, or of the overall market, such as the S&P 500 index. Often, this leads to mistaken conclusions that laggard stocks are value, and the market leaders are overpriced. More often than not, the market leader that appears expensive actually turns out to be cheaper in the long run than the lower PE, poorer performing stocks in the group. And then the other method is to compare a stock's PE with its own historical range from a certain period. So that's, if tomorrow the price of a stock you own fell 25% from your purchase price, would you feel better knowing that the PE had fallen below its industry average? Of course not. You should be asking yourself, do the sellers know something I don't? Some advisors will even tell you to buy more shares, throwing good money after bad. Meanwhile, your stock continues to get clobbered and you keep losing money. The bottom line, value investing does not protect you. Next section, no magic number. The PE can start out relatively low or high. My suggestion is to forget this matrix and seek out companies with the greatest potential for earnings growth. Most of the time, a true market leader is much better value than a laggard despite higher PE multiple. So that's very important there. The top 25 performing stocks from 1995 to 2005 had an average PE of 33 times, ranging from a low of 8 to 223 times. The three best performers in the group, American Eagle Outfitters, Penn National Gaming, and Celgene, spot PE ratios of 29 times, 11 times, and 223 times respectively before they made their previous price events. All three saw their stock price rise at a 40% or better compound annual growth rate over a 10-year period. So basically he's saying there's no common denominator, right, when it comes to PE. It doesn't, you could have 11 times, you could have 29 times, you could have 223 times earnings. And those three different stocks was one of the top 25 best performing stocks during that 10-year period. So warning, the super low PE. As a rule of thumb, I'm very reluctant to buy shares of a company trading at excessively low PE, especially if the stock is at or near a 55-week low in price. Remember, the market is a discounting mechanism that trades on the future, not the past. I would rather own a stock that's reporting strong earnings trading at a relatively high PE ratio than a stock showing signs of trouble trading at a low PE ratio. PE deception. If you compare a stock's price with its PE ratio, often you will see that a depressed PE coincides with depressed stock price and vice versa. The same could be said about an overbought or oversold technical indicator, such as stochastic oscillator. On the surface, both of these popular metrics appear to have a degree of accuracy at turning points, because the eye is drawn to the peaks and troughs. However, the 20/20 vision is usually a gift of hindsight. In real time, the eye is not very good at filtering out all the noise and static between the upturns and downturns. In addition, what is mostly ignored or misunderstood is the varying time frame spent in the direction of the counter trend reading. For example, one stock can remain overvalued for months, whereas another stock can remain at a similar valuation for years before a change in direction takes place. Try to buy oversold conditions or sell overbought conditions as a strategy is risky business. Trading with disregard for a strong directional trend will ultimately lead to buying into a precipitous decline. Although overbought and oversold conditions as well as high and low PEs can exist in turning points, stocks can also have extreme high and low readings in directional fashion just before the major events and declines. Major market declines always plunge to deeply oversold readings, and roaring bull markets storm through early overbought conditions while advancing much further. So he's just talking a little bit about, like, be careful when using oversold, those type of oscillator stuff. Broken leader syndrome, a common affliction among many investors, including some professionals, is what I call broken leader syndrome. Here's how it works. Investors who refuse to buy a dynamic new leader when it was emerging before it skyrocketed become interested after the stock has topped and broken down in price. Usually this occurs during a stage 4 decline. These people buy stocks that were previously expensive, thinking that they will go back up. The broken leader syndrome affects investors who weren't able to spot stocks like Yahoo, Amazon, Apollo Group before their biggest price moves. They weren't on board when one of these incredible stocks made a huge run of several thousand%. Then the stock gets slammed. Now these investors think, hey, they're onto something. With a former high flyer well off its peak, these latecomers come to the party, think the stock looks good, and is now a bargain. They use all sorts of reasons, such as it's trading near the low end of its historical range, and it's trading at only 20 times earnings, and has a growth rate of 40%. Worse yet, they'll say, it's down 70%. How low can it go? With all their rationalizing, they ignore the supreme fundamental, the market's judgment. They stay away when the stock was a market leader, probably because it looked expensive. Now, they fail to recognize a broken leader. When a leader tops, more often than not, the stock price is discounting a future slowdown in growth, which makes it no bargain at all. A common misconception was when the stock has precipitous drop. A stock falls from 100 to 25, declined by 75%. Since the stock can drop only 100%, the thinking is that, hey, the risk is only additional 25%. Wrong. If you buy the stock at $25, you could lose another 75% if it falls to $6. If you bought it at $6, or you buy it at $6, you could lose yet another 75% when it falls to $1.50. Or after all, your money in the stock is always 100%. So that's very important, right? I use the PE ratio as a sentiment gauge that gives me some perspective about investor expectation. Generally speaking, a high PE that are high expectations, and a low PE means there are lower expectations. Seeking out companies with the greatest potential for earnings growth, companies growing revenues at a rapid pace are your best choice. Look for new emerging trends that can translate into mass expansion. Trends that are scalable, right? So one company comes in mind when thinking just that few sentences, those criteria, is like NVDA, right? But we'll talk more about that later. Concentrate on the catalyst, right? There must be a catalyst that, will turn this company better. Over time, a stock grows more and more popular and the price rises consistently. Its PE ratio can expand as the stock price appreciates at a faster rate than its earnings growth. If a stock rises significantly over 12 to 24 months and the PE expands by 100 to 200%, doubling or tripling from where it started near the beginning, or from the bottom of the major price move, it's possible that the price move is at its later stage, which is getting widely recognized. Historical study of the super performance stocks show that average PE increased by 100 to 200% on average. Again, 2 to 3 times. From the beginning till the end of the price move. This can be used in 2 ways, this information. First, you can get an idea of a stock potential. Estimate what it might sell for on average best case scenario within a year or 2. Down the road from your initial purchase price. If you become buying a dynamic leader in bull market, you could estimate future earnings. Apply the expanded PE number to get a rough idea of the stock's theoretical potential. Second, you can buy a stock, say, with PE 20 at its initial breakout, multiply that 20 by 2 or 3 times, and see what the ratio could rise to. This gives you roughly 40 to 60 PE. So you hope the stock continue to rally, then you look for sell signals. Pay extra attention when the PE near 2.5 times, or even 3 times. It could top soon afterward. If this occurs, look see if there are signs of decelerating growth, signs of weakness in the stock price, to reduce your position and sell out. So you give an example about Home Depot in the 90s. It became an institutional favorite. It ran up ahead of its earnings growth, the PE expand from mid-20s to 70 times earnings for the next 4 years, while the earnings play catch up with the stock price. Then in 2000, the PE expand, from 25 times in 1997 to 75 times. The stock top afterward. So what does this all mean? The bigger point is that PE ratio doesn't have much predictive value for finding elite super performance stocks. There's no magic number when it comes to PE. In fact, the PE is far less important than the company's potential for earnings growth. So that's kind of the summary of that section. A little bit long, but it was very prudent when it comes to looking at PE. I try not look at the PE anymore. Once in a while I'll look at it, but it never come into my decision making, right? So any questions about this topic?
No question, but it kind of opened my eyes because I also used to look at PE a lot and thinking that it's very expensive or it's very cheap, buy it. So good to know that that's not the right way.
Yeah. Many years ago, I took the IBD level 1 course. That was one of the myths that debunked right away in that course. How, if you're looking at growth stocks, PE ratio doesn't help at all. And like this number, let's look at NVIDIA for a second. Look at it right now, right? It's 77 times, right? Really expensive. Especially if you look at what happened in the last few quarters. Can you see my screen? Oh, sorry, I didn't share my screen. Give me a second. Let me see. So 77 times is quite high, you know, compared to standard, I think. Like he said, 30 to 40 times seems to be like, you know, the average before the rise of a stock price move. But this is already up, you know, way more than 30, 40 times. So it's really expensive already if you look at just PE. And then, you know, what's worse is that, you know, the sales have not been growing in the last 2 quarters. In fact, it's like even the last 3 quarters. And then the earnings have been declining too, right? But, you know, but there are multiple factors why this stock is moving, obviously. You know, we all know like AI is the big theme now. And they're powering a lot of the AI algorithm out there. So the industry is now expecting them to grow their sales and revenue like super fast. And that's the reason why, and we won't know until we start seeing the next quarter number, right? Whether that is true or not. So the question becomes really tough, you know, at least from my perspective, like, do you buy into this right now, anticipating that it's going to grow really fast? And most likely, even if it doesn't grow as fast as, because really no one knows what the future of AI is going to look like. How fast is it going to grow, right? But the key is, as long as it's growing, then people are willing to pay higher price today, right? So even if the next quarter comes out and, hey, they're growing, maybe they'll jump, you know, in the past you can see it jumps 40, 50% in earnings. Maybe even if it jumps like, you know, 30%, I don't know what the number is. But maybe that's good enough, right? Because they're on track to grow again, right? Again, it comes back to, it's very hard to price growth in the future. Very hard. The only thing you can think of is more like look like a train, right? Like it's going one direction, it's going faster and faster, and as long as you know it's going faster and faster, hey, that might be a good train to catch, you know. You know, unless, like I say, unless it's disappointing, and we'll see. It's definitely something to pay attention to, just because, like, it's not like, here's the thing, right? It has built a nice uptrend from the lows, and then it has built a nice cup base. So this is, you know, it never came back, right? So, and then it passed the 200-day right here, and then 50-day went above 200-day here. So now this is like, this uptrend started. So we'll talk more in the next chapter, which is he talked about the 4 stages, right? So we have, you know, this run here, stage 2 he calls it. This is like at the top, it's like kind of start to top. So that's stage 3. Stage 4 is where it started to go down, and then it starts stage 1. So stage 1 is where it tried to build a consolidation period, right? And then usually a good sign is when the 200-day, which is right here, it starts to turn. So as soon as this 200-day starts to turn upward, that's when you kind of know, hey, something has changed, right? So here you can see the 200-day drop, and then now you can see it starting to turn upward. So that's the long-term trend he's talking about. This is all in chapter 5, which is the next chapter. So now this stock is rising now, right, in stage 2. So now he's starting the stage 2 uptrend now, which is, it could be a long uptrend, like you said, 1 to 2 years or more, right? So that's the, and then what we should be seeing is, like I said, anticipation of growth in earnings, right? So, you know, again, how fast it's growing, to me, is almost irrelevant at this point, because no one really knows. But we do know one thing, is that it's going to grow. And so the market is betting on this right now to grow. And so it is almost like a turnaround story. And, you know, it could have, you know, many quarters of growth, right? We don't know how fast AI is going to grow. So that's something that, you know, but the chart is already telling us that this is happening, you know, even before the fundamental numbers are coming out. But that's the story behind it. Any question about this?
Sounds good.
Okay, No, so PE ratio, yeah, it's never good. You know, this is super high, 77. If you look at PE, most people will like, I'm not gonna buy this stock. You know, because you could look at Microsoft, which is also AI driven right now. A lot of the story, 30 times, right? So you can see this big uptrend, downtrend. Again, you can see. Let me take away the markup for a second, just so you can see the 200-day and 50 days converging right now. And red line is 50-day and the black line is 200-day. So obviously same thing, right? Here you see this like downtrend in the 200-day, but right now it's flattening. Right now it's flattening, and then soon it will go up. And again, that would be a big sign for stage 2 rally to go. So now we have this, you know, rally from the bottom, and then it goes sideways, and then now it's starting. So this is like the consolidation period right here. All right, this is the downtrend. Now we might possibly be going up, right? So again, this is also AI driven theme stock. Again, same thing. You can see this is why this stock's been going down, because, you know, he talked about that, right? So when it's near the peak, the earnings are growing, but when it's like, it can drop before, it can drop once the earnings start to decelerate, and this is exactly what happened. And then the sell, same thing, right? So now it's the opposite. Now we're looking for, is it going to grow? What would be the catalyst to make it grow again? So we really need to know that before you want to get into the stock, right? And so you know, those are two stocks I feel like really show their strength this last week. You know, look at Microsoft. Look at this big bar. Look at the volume, right? Super high. In chapter 5, he talks about when at the beginning of a stage 2 uptrend, he talks about how the volume should be high, super high, in fact, he said, because at the beginning of the uptrend, every institution wants a piece of it because they know the future is going to be bright. And we're seeing that in NVIDIA. Go back to Microsoft. Look at this volume. Wow, super high right there, right? Confirmed by the price movement. Both of them are like, you know, really, really strong. So again, like let's jump to other stocks that I know did well. Meta. Let's see how this one behave. 24 times, so slightly lower. Okay. Earnings. Look at this earnings, decelerating like 5 quarters in a row. Actually, if you count this one too, right? So this is what he's talking about, right? When you know, when it ran in the past, and then it's gonna decelerate, and that's why this stock tanked so much, because that's what happened. The earnings decelerate, and then look at the sales, same thing, right? So the question now is, when we're looking for a new stage 2 uptrend, right? What is the catalyst for this guy to continue to go up? Obviously, we know they're trying to control their costs. They have shift. I think they have shift back. You know, maybe less metaverse stuff now to cut their costs. I don't know how they're gonna make more money. That's the one thing I'm not sure. Are they gonna come up with a new product or service? But the market likes it right now. So for me, I don't have as much conviction on this stock because I just don't really understand what the future prospects are. So not as much as Microsoft and Nvidia. But this stock is acting like there's something happening, a catalyst happening. I don't know what it is. The 200-day is starting to flatten out. It's still slightly, downward, but it's starting to flatten out. So, and then if it flattens out and then come back, then that would be a really good sign, right? But again, I don't know enough about the catalyst for this company. But a lot of analysts I know likes it because they're doing a lot of cost restructuring right now, which could help improve their balance sheet. But I just don't know how they're gonna make more money in the future. So that's a hard one for me. Let's go look at Google. Well, most of the big caps did well this week for sure. So Google, you can see the 200-day is still trending down. So that's still in a dangerous territory. Again, I don't know what the catalyst could be for Google because their AI is kind of losing to Microsoft. AMD, big winner this week. You know, same thing, right? You can see the earnings decelerate only for, you know, 2 quarters. Sales also decreased for 2 quarters. But I think one of the big things they announced was a new chip or something. I don't know if it's AI related. I didn't really pay attention. But you can see big volume. Uptrend line, like going up. Then the 200-day, again, it's still slightly down. But hopefully it'll curve back up. So AMD probably follow very similar to NVIDIA growth track if they're, you know, if they're gonna do AI chips too. I'm not sure. I have no idea. I don't know as much about AMD, but I just know they released some new chips this week. What else did I miss? Apple. Let's look at Apple. You can see it did jump on higher volume, but the magnitude isn't as strong as the other guys. The earnings definitely decreasing, sales decreasing. You see, all these stocks are decreasing, right? You know, before the peak. So the question is, you know, again, what is the catalyst that will drive this stock to grow again? That's the big question. I don't know enough about that for this one. Amazon. Same thing here. Look at the 200-day. This is really dangerous. It's still going down pretty steep slope. It's not even flattening yet, right? And look at this earnings. It's so bad. Look at this. It's decreasing so fast. Sales down to single digit growth. So this one looks very dangerous. Yeah. So not very good. I think that's probably the only one. Tesla. Let's look at Tesla. Okay, so same thing. 200-day declining. It looks like it's flattening out, but you know, not quite, right? In fact, it found resistance at the 200-day. That's the bad thing. And you know, earnings are decelerating, so this is a concern, right? It's not negative. It's still making profit, but it's just decelerating. Sales also starting to decelerate. You know, I am curious what going to happen to Tesla, because you know, they've dropped their price of their car so much, right? 20,000 in some cases. So that's going to impact their sales. And sure, they might sell more volume, but is that going to cover enough to 20,000? That's a lot. So I don't think so. It will cover it. And then same thing with earnings. I think they'll make a lot less now. Their margin will be a lot less. So some of these numbers going to drop, you know, like return on equity and stuff like that. So yeah, I am worried for this stock. I don't know. I don't have a good feeling about it. Again, I know I heard from some friends they start charging. You know, they're gonna start charging for like the chargers when you go on the road to charge your car. So people are not happy about that. So you know, sure they can make some money there, but I don't know how much that'll give them. Ultimately, they need to sell a lot more cars now, which is probably even more difficult. So anyhow, that's another thing. But yeah, the trend line is still going down. 50 days still below 200-day. You know, we'll see, right? Like it's trying to look for support here at this level, 50-day. But if it fails the 50-day, I can see it going back down. So, any other big caps we want to look at before we jump into the market?
No, I think. No, I think this is it. Yeah.
Okay, I'm gonna jump to Nasdaq now. Okay, so we found support at the 50-day. So the previous week we fell below it, and then this week we bounced back above it, which is a really good sign. Volume is super high this week. Obviously you can see the relative strength is better than, because this is against S&P, so it's performing a lot better than S&P. Yeah, let me look at. So Wednesday, so what happened Monday was a rebound right here. Tuesday continued that rebound from the lows. Wednesday was a tricky day. It undercut the previous day low and then rebound. Thursday we have that huge update, surprise update. That was a very interesting day, and I'll show you why. If I put back the markups here, it takes a second here to load. Oh, maybe it was on the weekly chart. Let me see. So here's the line here on the upper channel line, and it broke it on Thursday. So that was very interesting, because that by definition is almost it broke the resistance line and now it's back on the uptrend, right? So that's something that I think is a good sign for Nasdaq. It's more obvious on the QQQ even, which is the top 100 stocks in Nasdaq. Oh, there you go. This is where my line was drawn. You can see it clearly went above it, and not only that, you know, Friday it followed through with a new high. So it gave back a little bit, which was very little. So this is a super good sign right now, and also the probably the biggest thing is how it's hard to see here. Let me take away my markups now. Is you can see like the short-term 10-day green line is that this is now okay. So let me draw this. It's now on an uptrend right here. The pink line is also on an uptrend, right? Almost the same trajectory. 50-day is now on an uptrend, and the 200-day has finally flattened out, right? It hasn't gone back to uptrend yet, but that's what we will assume now, is that if the market continue to be this strong on Nasdaq or QQQ, we will see the 200-day finally turn up. Okay, that would be really good news for Nasdaq. So, and this base here is really nice. It's a flat base. You know, it's been in consolidation now for like how many weeks here? 1, 2, 3, 4, 5, 6 weeks now, right? So you can see it here more clearly. 6 weeks flat base, very tight. You know, and super high volume, right, on this bounce right here. And again, this is sign, right? And we see that in the mega caps, right? Even more so. So definitely techs are doing really well. You know, obviously not all of them, but you know, most of them. So yeah. So that's a good sign. I think Thursday, even though it ran up 2.6% that day, it didn't come in on higher volume. So on QQQ, if we go back to QQQ, let me see, it did. So which is the top 100 tech stocks. But when we go to Nasdaq, it didn't, which is every tech stock. So that's the interesting part, right? So, which means not the whole Nasdaq is showing strength. In fact, only the top 100. So, very interesting. And you know, it maybe means that going forward, some stocks will do really well, and some stocks are just not going to do well at all. And so, you know, and I don't know about this bank fiasco, because it stemmed from the, you know, SVB bank, and that's where a lot of the tech companies are using SVB, at least the, you know, the startups and the smaller firms and stuff. So that will, how do you say? Some people say innovation now is taken back many years, because those startups, they won't be able to raise funding so easily anymore. In fact, some of them might not even survive because they just couldn't raise money. So that will push those innovation, at least new innovation, back a lot more. A few years, I don't know. Just, you know, I have no idea how long. But whereas the big caps, they have the money, they have the cash. They can easily steal those ideas and make it theirs and start their project or whatever. You know, of course, you know, startups are usually do it better, but because they couldn't raise funding in the future, the other thing is there's also talks that maybe we might see more companies fail in that world going forward, because they're gonna run out of funding. I'm not sure how true that is. You know, we'll see in the next few months whether that is true. But at least when you look at the chart, that's what it's telling you. It's saying the top 100 stocks are doing well in QQQ, right? Whichever those are, and then the rest not so much, right? Again, of course, this is generalization, but the point is, you know, the ones with money are going to do a lot better because they have the cash to expand on new innovation. Whereas the smaller companies, they don't have the money right now. At least they're going to have a hard time going forward getting more money. So that's why that's a challenge. Whether they will come back around later, I don't know. It's going to take some time. The other thing, obviously, that could impact the tech world is the interest rate, right? As interest rate may be going down near the end of this year, things are going to look better for the tech companies because they can borrow at a cheaper price because, you know, they use a lot of borrow money. So that will work in their favor, but it's just a question of, again, how soon can that come, right, for the smaller firms? And it seems like it's still 6 months away. So they have to survive another 6 months before money becomes easier to borrow again. So that's the challenge for them. That's why the bigger firms are going to have better, you know, who has better balance sheets. They're going to do way better going forward, right? Does that all make sense?
Yeah, completely.
Yeah. So there's a lot of talk about what happened to the banks are doing the job of disinflation for the Fed, which is a good thing, meaning they might not even have to raise that much anymore. Let's go quickly look at the futures fund rate and see what that looks like. I believe they might be only priced to raise one more. Let me just double check here. It changes every day. So it's going to jump 4.5 to 4.75 March 22nd. So a quarter point hike. May stays at 475. June. Wow. June is pricing in a decrease in rate right now. A quarter point.
Wow.
This is news to me. Yeah. So let's keep going. July. Wow, another point decrease. So June, July, market is pricing in decrease June, July. This is happening then. Wow, another one in September. Oh, this is amazing. So 425, September to 4, November, pretty close. Either stay or reduce another quarter point. But right now, let's just use the maximum, the highest. Which is stay in November at 4%. December, another decrease to 3.75. Now, this number coincides exactly, right, with the 10-year, right? So if we go look at the 10-year, you can see it dropped from 4 now to below 3.5. So and then yeah. I think the 2-year yield is also near that number. Let me just go take a quick look. I don't have that on the Market Smith. Let me go to CNBC. Let me just type here 2-year yield. Oh yeah, here US 2-year. Oh, 3.8%. So yeah, see that coincides pretty much with the 10-year and 2-year. More so probably for the 2-year. So which is the short-term rate. And it's now at 3.8%. Where is the chart? Anyhow, I saw it earlier. It says 3.8. So the future is pricing in many rate reduction after this one, right? So this is why the Nasdaq, QQQ, and Nasdaq are doing a lot better this last week. This is a strong 5-day trend right now. Very strong. Yeah. Even on Friday, it gave back a little, right, compared to the gains on Thursday. So this is on a strong uptrend projection. And also the other thing was Friday was quadruple witching day for the options and futures as well, I believe. I don't know about the futures, but for sure for the options. And that's a lot of volume came in, and it didn't even, make the Nasdaq go down. So after that so much volume exchange, it's unlikely that people who haven't sold yet in that sense. So we'll see. Let me see what else. I think Thursday was the turnaround day because two news came out, right? The Credit Suisse got 54 billion loan, and FRC First Republic Bank have 30 billion from the private banks, from the other banks to help them as a loan. So that's two big news right there on the same day, and the market likes it, So, and I remember that day, like it didn't jump like gap up, it just slowly moved up right throughout the day, and so we go to the 15-minute. I'm sure we can see that. Yeah, see, it didn't jump up, it didn't even open gap out, right? But even after the Credit Suisse news overnight, it didn't move that much at the beginning. But then the talks about FRC came out, and even no details yet, but then it started to move up, and then pretty much by the end of the day, it was a done deal. And then the market continues to like it. Friday, like I say, give back some. Not even half of it. Really good sign. So I expect this trend to continue. So that was the Any questions on Nasdaq?
Mm-hmm. So it looks like, do you think that wedge that you have drawn, it could come back to test it, or?
Yeah, it's possible. I mean, anything is possible. So if I just refresh this again, like it could drop another day, right, to test back the 10-day. It's possible. I hope it doesn't, but you never know. It could. So it really depends if there's any. To me, this week, it's the Fed news. I don't know if there's any other news, but that's probably the big one. And so that's kind of the next thing we need to talk about is, Fed's gonna raise a quarter point, and that's like pretty highly anticipated now, because especially after like EU did expect to raise exactly what they were gonna do, which is 0.5, and market seems fine there after they did that. So now everyone's like, well, if it's fine there, why not do it here? Same thing, right? So they're gonna do the same thing, but the thing is, they're gonna, just like what the market future is predicting, they're gonna change their tone going forward. They won't say they will stop raising rates, but they will say, right, there's a situation here, right, in US, and that they need to watch it closely. And I'm sure there will someone say the same thing, which is like, there's no bank crisis, there's no, everything is sound and all that. But they're gonna be very cautious going forward about raising rates, right? So because they don't want this to continue. So that's a good sign for the market, right? Like, that's why I see the market have a high chance of rallying on Wednesday. Because of that. It's not it's not. So Kramer did a section on this. I didn't take a screenshot. I should have taken one on the TV. But he went back, and this was actually, I heard this same story from a couple of other people probably on Twitter, I think. Same thing. Back in 2018. If we go back to 2018, right? Again, I wish I have taken that snapshot. I forgot now. But let me just go to. Why is this not working? Why am I doing wrong? Hold on a second. Yeah, this is not working. What's happening? Let me reset again. Something weird is happening. Okay. Go to 18. Huh. Okay, let me try S&P. There might be some problems because like Market Smith did an upgrade yesterday. Anyhow, let me go to 19. It's not that long though. Okay, now this one's working. I don't know why that one doesn't work. Okay, so if you remember 2018, there was 3 months towards the end of the year where they were gonna raise rates, and then they pivot. And on Boxing Day, they pivot in the sense that they're not gonna keep raising rates. And so Kramer was saying like, this is similar, right? They're still gonna raise rates, but the thing is, going forward, they might not raise rates anymore. And that's exactly what happened back then. And the funny thing was, if I forward a little bit more to like say December of 19. So here's the December bottom. They didn't actually cut rates until almost 6 months later. Like I think it was around mid-May or June, I can't remember. So it was around this time frame where they cut rate. So it took them like 4 or 5 months before they cut rate. And the market ran up like crazy for the next 4 months after they did that. Like they just say, hey, we might not raise rates anymore. Like I don't even know what words they use. Basically, Kramer is saying, hey, as long as they imply something like that, the market will rally. Okay? So if this coming week they're going to do something similar, and they're going to imply that, hey, they might not raise rates, in the future, then we're going to see a strong rally, right? And we don't even know when they're going to cut rates. Again, the pivot, when people say the pivot, which is when they actually went from raising rates to cutting rates, that might not happen for months later. But right now in the future, we can see in May they're going to start reducing rates. I'm not sure. Maybe there will be more banking issues. I don't know. Like it's got to be drastic for them to start cutting rates because inflation's still there, right? So, but who knows? Maybe the inflation number is going to start falling too, right? I don't know. So we won't know for like 2 months or 3 months. But the point is, if the Fed comes out and imply that they're not going to raise rates no more, which means it ends faster than it previously did, because you have to remember, 2-3 weeks ago, the future was pricing like until June or even, I can't remember, 3 more rate hikes, right? So now we went from 3 rate hikes to only 1 more, which is this coming week, and that's it. So, so this is something to, I feel pretty good about, because we are near the end of this hike, and unless inflation do something crazy and shoot up like crazy, which I don't see. Look at oil, right? We're going to talk about that in a second. All these commodities and stuff is just dropping like crazy in the last week or two, right? So I don't see inflation staying around much longer, at least not that drastic, right? So again, there's no reason for the Fed to continue raising rates anymore. Yeah, so yields dropping, right? We saw that really fast. In fact, it broke like a big moving average. Oops, I had to reset to today. Yeah, it broke 250-day. Right now, you can see even 200-day if closed on Friday. Look at where it closed. Right? This is the line here. It closed at the bottom, way below that line. Of course, it could still bounce back, but it's staying 4 days now. It has failed, staying above this line. So if this continue, we can see it go, even back to 3%. Like, I don't know. I have no idea. It depends on how bad situation get, I guess. But it's not looking good, right? So the yield. So that's that. And then we have lots of recession signs, right? Oil crash, right? Steel dropping. Those are like, I think copper also is dropping. Look at oil. Just it broke this long-term support line at the bottom range. This is really bad sign. I don't know how much lower it's gonna go, but this is not looking good. Like it broke that. This is a long-term support line, and they broke it. So that's not good. And like obviously volume is super high, right? So, still, yeah, go.
For inflation. Good for inflation.
That's right. It's basically disinflation right now. Steel, look at steel. Broke really hard. I mean, this is a long-term trend line. Broke it. Now it's heading towards the 200-day. So, I don't know if we'll find support. Copper is doing the same thing. I don't remember the symbol for copper. But it's doing the same thing. So, all these are recessionary fears. Yeah, copper is not doing well. And the only thing that's doing well is gold and crypto. So, let's look at gold. Look at this. I kind of missed my bowl because I actually have screenshots here. The whole week, I was like, right here, see? In the McBoss tool, you can see like mining, like this was starting from Monday. It just keep, all these stocks just keep running up for the whole week. And I miss it, like, unfortunately. So, you know, this was Monday right here, the gap up. And then it just keep running. And then Friday, look at Friday. Holy, it just jumped, broke out. So, really, really good. I don't know how far it'll go. But this is a good sign for gold stocks and stuff. Crypto, yeah, let's look at BITO, right? Like this is one of the new ETF. And look at it. Again, same thing. Almost same as gold. It's funny. Like it broke that resistance line. Really strong Monday. Look at the volume. Wow. Right? Tuesday, continue. Wednesday, took a breather. Thursday, another day of breather. Friday, boom. Now a new high. So now it's clearly above making new high. I think Bitcoin was hitting 28,000 this morning. I heard. So it's really crazy right now. Let me see here. Bitcoin. Yeah, 27. I think it might have hit close to 28. Pretty close. 27.7. Okay. Yeah. So those are, you know, doing really well. So it's like very interesting. Yeah. Let's just look at S&P as well. So when you look at S&P and Dow, they look a lot weaker, especially even at IWM Russell. So that's the scary part. Like S&P, the funny thing is S&P didn't make it made a low on Monday. That was it. So that's, you know, it's not as strong as Nasdaq, but it's not as weak as it looks, right? Look at Dow for a second. So Dow make a low on Wednesday instead of Monday, and then yeah, it's still near the bottom. So this is looking pretty bad right now. And then I think Russell is the worst, right? It's way below. Yeah, it broke this 200-day. Okay, now it's now at this level, and then the lows right here. So hopefully, like, you know, I think Wednesday was also the low, but Friday was a very bad close. So it's like two different tails, right? You have Nasdaq on one end doing pretty good, and then you have Russell doing really bad on the other end, and then you have S&P kind of more doing okay, and then you have Dow kind of starting to look bad still. So it's kind of you know, 4 different index going different ways, which is very, very interesting. Yeah, I just want to see, probably even more obvious on the comparison chart here. Let me see. Why this one is this? How this one? Okay. Yeah, I don't know why that one is not working. Anyhow, so that's where we're at. The small bank regional index are obviously getting crushed. That's the. So here you can see Monday was the bottom. Now I don't know if that's the true bottom, but hey, it's been tested 4 days after and it didn't make a new low, so maybe it is the low, right? I don't know. and right now it's waiting to catch up to this 10-day, and we'll see if it bounces above this 10-day. That would be a strong sign that maybe this is the bottom. You know, yeah, let's take a quick look at that, because that honestly, that one has been very accurate, right, for the last year. That's why yeah, we have extreme fear right now. And if you look back at last year, like this only go, like I can only say up to April, but still, like, it's pretty good. So every time, right here, see, this one lasts a little bit longer, the April one. So it's starting from April 26th, and it lasted till May 11, 13, 16. Yeah, it lasted for a month of extreme fear. Yeah, almost like a month. Okay. Yeah. So this one was a long time. It was in extreme fear for almost a month. And then I don't think we see. Okay, here's another extreme fear in June bottom. For like maybe a few days. Actually, no, maybe like a couple of weeks. So June 16 to July 6th. So like, yeah, 2.5 weeks. So those are the two big extreme fear level. And then here we have another one in September. So 23rd to 13. So that's also 3 weeks. So, you know, and then we haven't seen extreme fear since then, which is the October low. And now we start going to extreme fear basically starting March 10. So it's only been a week. So, you know, it could last another 2 weeks. I don't know. Like, that's why people are really fearful right now. Like, what else could happen in the next 2 weeks, right? Obviously, if as time goes by, nothing happened, then it's a good sign. You know, again, I think the Fed, they're in a very hard position right now, because on one end, they don't want this crisis to go deeper. On the other hand, you know, they don't want to stoke too much inflation, right? Making it sound like, hey, it's easy money again. So they're going to be in a tough spot. You know, they might actually not say, you know, they're going to stop raising rates. They might just say they're going to keep and wait and see, right? Because inflation data is still high. They might still say, hey, we'll just continue to monitor, just like what they did last time. So if they do that, then yeah, I don't see a rally happening yet. But like I said, the good thing is, so one of the things that happened on Friday was on IBD Live, Charles Harris, he was on it, and he sees the same thing that I'm seeing, which is a lot of stocks are acting well. A lot of growth stocks that we consider growth stocks are acting pretty good. You know, but for him, he's more looking from since the beginning of the year. For me, I'm looking more from like just 1 week. Of course, 1 week is like seems like nothing, but you know, we'll see, right? Like if we look at SMH, right? I just want to use SMH because that's obviously the strongest area right now, I feel. But yeah, let's take a quick look. Yeah, but yeah, like I think again, if we look at the indexes, it tells 4 different stories, right? And that's the scary part. You know, we have Nasdaq looks bullish. We have Russell looks bearish, right? And we have S&P semi-bullish. But I don't even want to call it bullish, but it looks better than average. And then you have Dow that is kind of like semi-bearish, right? It's kind of almost like ready to turn down. So it's like these 4 indexes are, you know, they usually don't diverge, especially this much. So the market is basically at an undecided point, right? So I can tell you this week, like all the stocks that I've got stop out are definitely like more in like, you know, in this camp, right? In the bottom 2 camp. And then the stocks that I didn't stop out are the ones more in this 2 camp, right? So it's really hard to trade stocks in general right now. Like you have to be very specific. That's what I realized. and which is not good because you're taking more risk, right? If you're investing in only chip stocks, well, if that chip stock get hit hard tomorrow 5%, then you're gonna get hit hard on your portfolio because you're so weighted on that one sector, right? I usually don't like to do that, but that's what the market is doing right now, that's why it's not a good environment for investing right now. At least not for investing big, right? So, you know, you want to be a little bit more diversified so that you don't get hit hard if any one specific sector go down hard. And that's the thing, you know, anything can happen, right? Like, so especially at times like that. So it's very risky, you know. But anyhow, let me just bring up, I don't know why it's not working right now. The markets may have been having issues since last night's upgrade. Yeah. Anyhow, we'll get it loaded sooner or later. Let me try another stock. Sometimes it just gets stuck on the specific stock. Nope, whole thing's not working right now. Okay, so this list here. Before I go down this list, is there anything you want to look at specifically?
Yeah, definitely SMCI, ANET.
Yeah. So,
Danny.
okay.
Yeah.
SMCI is here. 22, ALGM number 6, LSCC 14, ANET is a little bit down here, 36. So this one is coming up to join this group here. These are the, like, if I just bring tech only just to see what else is there. Yeah, you can see, you know, these are the chip stocks here. We have computer, software, financial. Fastly, I missed this boat. I totally miss it. It's unfortunate. So we're going to jump to the chart for a second here. Okay. So you can look at ALGM. Here, a minute here. First time usually take longer to load. You see, like, you know, just like the general market, a lot of them pull back recently, but just like the Nasdaq, right? Monday make a new low, Tuesday bounce back, Wednesday drop a little bit, Thursday was the big day, Friday pull back. So this one it has come back up the 10-day moving average, right? But obviously it's not the strongest, you know. It hasn't made a new high this week. So ALGM is okay. It's not the strongest this week based on just the recent week action. If we go to let's jump to ANET, because that's the strongest one this week, I feel. Jump 36, right? ANET here. So here, so Monday it pulls back. Tuesday bounce, Wednesday bounce, Thursday, that was a big day. It was a 6% day.
Yeah, Thursday was big day.
And then Friday, look at Friday. Like if you didn't want to pull back, it pulled back and then closed at the top, right? So this stock is super strong right now. And look at the volume. Look at each day at the bottom here, right here at the bottom. Look at each day. It's just the volume keep climbing and climbing, right? There's a strong sign of accumulation right now. You know, it started last week, all of a sudden, right? The week before, I mean, sorry. It started that, you can see those 2 days right there. And then this week, you know, it continues on. Now, it's definitely extended now, you know, buying at this level. But, yeah, it's really strong. It's hard to get in right now because, you know, it's kind of extended away from the 10-day. So probably better to wait. I sold a little bit on Friday because, you know, I had a really good gain. Just a little bit, but you know, we'll see, right? It could continue to climb and the market continue to do well, but there's strong accumulation right now. So, you know, you want to let it run. Always let your strongest stocks run because you don't know how far it'll go. But you do want to take some profit as it goes up because, you know, you never know it will pull back, and then you know, so it's kind of like following that's the concept, right? You know, you want to trade medium to long term, and then have some position that you want to trade short term. So, you know, every time it makes some good profit, take some, use that for trading short term, maybe buy back lower, you know, kind of thing. So ANET is really strong right now. It's but yeah, let's look at LSCC. This one is also strong. I was surprised how strong this was, but Friday it pulled back quite a bit. And this stock is a little bit more volatile. Like you can see, right, the history. It's just like riding the 10 days. That's why, like, you see, every time it goes up, it pull back 10 days. Goes up, pull back 10 days. Goes up, pull back. And then even this week, you see, it goes up, pull back on Monday. It goes up, pull back on Wednesday. Goes up Thursday, pull back on Friday. Every single time it touched the 10 day. So it just tells you never want to buy too far away from 10 day on this one. But the uptrend is strong. Even though it does this, the trend is strong, and you can see it like it continues to power higher. Next one is SMCI 22. Now this one has broken all the way to its 50-day. Very challenging. The one good thing is it didn't break above this low right here, 85.61. That was my stop. 87.26 was the lowest it went to. So I was still holding pretty much most of my positions, and then now it's back above the 10-day. It's definitely, out of those 4 stocks we just mentioned, this is definitely the weakest one right now, because it's still on the downtrend, right? So we'll see like what it does next week, whether you know, like, but if you look at the volume this last week, like the selling volume is actually, well, Friday was, you know, I don't consider that selling volume because it's kind of like just a little pullback. But you look at Wednesday, look at that volume, right? It wasn't, even though it was a rebound from the low, it wasn't that high, right? So it means that, especially when it hit new, anytime a stock hit new low, recent low, you want to see if volume come in. If volume doesn't come in, it's always a good sign. Yeah, so this one is a little bit scary this last week, but I was surprised it actually hold this. I was like, oh man, it's gonna fall below this, and it might even go below 50-day. Guess what? It found support at 50-day, and it's bouncing from there. This is exactly what I want to see. So I'm not adding to it because I already have a lot of shares. So, but I think it might be okay. Yeah, it might be okay. We'll see. Like I said, there's a few stocks that really jump out this week, because like I said, this week technology did well. Fastly did well this week. I miss it. It's so fast, right? Like it just happened so fast. You know, it was on my to buy list, and then I don't know how I missed it. So Monday, Tuesday, when you see all the arrows here, like the blue ones, give so many opportunities to buy it. I just didn't pick it up. Friday give back some, but you know, it's not too extended yet. So it's still potential to buy. It's just, you know, I really don't like buying when it's far away, like when it's above the 10-day too much. I really like to buy when it's like near the 10-day. That's like the best price to get while it's still on an uptrend. So Fastly surprised me a lot this week. It's not, you know, it's not a new name, but it is, you know, it did come from a big drawdown. So there's lots of those, right? And so I don't know, like it's hard, you know, it's kind of hard to buy those right now. There's just so many to pick from. But that one's at the top on the list. PDFS is another one. This one I own for trading right now. I own this for trading right now, and it's doing really well. Here's some of the buy signal on Tuesday and Thursday. It bounced off the 10-day, so those 2 days could have, you know, bought. And then Friday, look at Friday, like barely gave up anything. This is exactly what you want to see. After a strong bounce on the 10-day, the next day it just barely even give it back. Those are good signs that the trend will probably continue higher. Rambus, Okta, those ones are pretty good. Yeah. Yeah, we're gonna focus more on tech today just because tech has done really well this week. You can see same thing. All these stocks are bouncing off their moving average. Some of them are still within reach. So this one Friday, you see it didn't come all the way back down to 10-day, but you know, pretty close to it. So might be an opportunity to get in. What was the other one? Okta. Okta is also another big drawdown. Excuse me, drawdown stock here. Long base. Look at this base. Wow. It's a big drawdown from the top, but right now it's so tight. Like, it's just amazing how tight this stock is. Like, I couldn't believe it. Like, it's just so tight. It's amazing. And it's doing well. Like, even though it's so tight, the numbers here are crazy. Like, you see, like 70 to 80, right? 87, like in like 2 weeks. Pretty crazy swing. And you know, this is number 29, so like it's up 63% since October. It doesn't look like it, but it is. And so, but because this stock has dropped so much, right? Like, see, it was at 160 a year ago, and probably even higher, like, you know, back in 2000, early 2022. So it's you know, it's again. So the other stock, I don't own Okta, but I did add if I go down here, PANW. So I really like PANW. A lot of people start adding it right now to the portfolio. So I just like how this chart looks. Like, it goes straight up here, and look at how tight it's trading, going sideways. You know, it's just so tight. Like, this is crazy. Like, this is a big cap too, right? So, yeah, I just really like it. Right now it's not doing much. It's starting to move back up on the right side, so we'll see if it break out this week. It's like, you know, it's not that far away, because it's 192.84 was the top, and right now it's trading at 189. So it's only $3 away from a new high. So yeah, so that I prefer this over Okta just because I don't know. The Okta is obviously is still great because it's but like I say, it's just a tinier range for the dollar wise. But both of them are really good. PI I haven't looked at it in a long time. Let me see what it looks like right now. That's another chip stock. I've traded in this guy a few times now. I haven't. Yeah, see, it just keep going back and forth. In fact, this week's action doesn't look good. It's still below 10-day, so I don't like it. ASML. Oh yeah, ASML, Perry. Yeah, let's look at those two. They look pretty good. So this guy, you see, now it comes back above 10-day, and yeah, Monday was the low, and that's exactly what you want to see. It hasn't made a new low since. It's now back above 10-day. Looks good. Perry. So yeah, Perry. You see, Perry is almost like SMCI. It kind of went to a 50-day, right, and then now bounced back up above. So you know, looks good. Is exactly what you want to see. So that looks pretty good too. This name keep coming up, ANSS. So there's even Ropel was talking about this one. Like, there's a few of them. CDNS. I don't know if CDNS is on this list or not. No. So that one probably has slightly lower earnings. But this one keep coming up too. You see Marcus Smith's back up. Nope, doesn't look like it. Okay, so here, look at this. This is a nice bounce on the 21-day. That would be your buy signal there, and then just slowly trend upward. Really nice. Make new high on Friday. Give backward a little. Really nice. This one is coming up fast. So there's something happening in that world. No one really understands the computer software design world. So it's really interesting to see these stocks going back up. STM, I haven't looked at that one in a while. Hubs, this one is mentioned quite a few times. Software enterprise. So yeah, same thing. Fell to the 50-day, bouncing back now above 10-day. So this is looking good too. So that's exactly what you want to see. Like, they all bounce back this week, and above 10-day. Manpower looks okay. PD, page duty. Oh, this one reported this week, and then PAF, UiPath too. They both reported this week. Really good numbers. Jump a lot, I know. Yeah, so there was this big jump on Thursday. See, this is a good sign. Thursday, I try not to buy on the day, like especially in this type of environment. I try not to buy on like big jump day, because I think that day will move like as much as 20%, I think. And then next day, look where it closed. It didn't want to give up that much, so that's a really good sign. And this is in the base, so this is, you know, really good to watch. And then UiPath, look at that one too. Okay, a little bit more tight, and same thing. Thursday it jumped right here, and then Friday it gave back 1%. Wow. Thursday it jumped 17%. That's amazing. UiPath is yeah, they do a lot of automation. I think they do AI stuff too, so they're doing well. I like this name because it's probably, I don't see anyone talking about this stock. So, and I know about this stock, like, you know, because they do a lot of AI work too, like automation stuff. SC is an old name. It's starting to come up. Smart. Let me jump in. This one also reported this week, did really well. Like, there's a few stocks that did reported and did really well this week. This is one of them. And look at this. It bounced off here. I don't remember which day it reported, but I think it might be Wednesday. And then it just keep going higher. See, very near a breakout point now. So we'll see. All these stocks are setting up to break out, which is very, very interesting. At least in the tech set. Duolingo. Oh man, I don't have this right now, but a lot of people watching this. It's doing really well. Look at this. Yeah, look at this high volume day right here.
Mm-hmm.
And then it fell to the 10-day rebound. That's your buy signal, and now it's, you know, making new high each day, like pretty much. And then now it's near the previous high now. So we'll see where this goes. This lots of attraction on this one. I keep hearing a lot of traders talking about this guy. So, and you know, it's definitely looking good, the chart. Book day, GFS. Interesting. GFS is starting to come back up too. I haven't seen this in the top 100 in a long time. So let's take a quick look. It's pretty tight. Okay, it hasn't really break out on the resistance line yet. We'll see. But it's tight. It's trading tight, so that's a good thing. ADI, CRM, FTNT. So here's the thing. On Wednesday, there was barely any stocks above 10-21 day line, which is very interesting. And then all of a sudden, Thursday and Friday, you know, because Thursday was a big update, and all of a sudden, so many of this turned back into uptrend mode.
Mm-hmm.
So it was really interesting. So to me, that, like I said, Thursday was a very important day for the tech stocks, at least, and because they all bounced back, right? And to me, that's really good sign. There's some like DSGX, this one starting to pop up. Yeah. Let me see if anything else that's good. Yeah. So there's still a lot that is below on the downtrend, but a lot of the top stocks are starting to come back up. So that to me is a good sign, that the tech might continue, you know, to go up, right? Especially if the Fed comes out and say, yeah, we will be cautious about raising rates. They might not say they're going to stop. They might say along the line they're going to be cautious about it. So that will be a big lift for the tech stocks, I think. Even if they didn't say they're going to stop, I still think it's going to be a little bit bullish. As long as there's no other crisis going on. Yeah. So that's the tech, guys. Is there any other tech one before we jump into others?
Mm-hmm. No, sounds good.
So I'm gonna take away the tag, and I'm gonna load the other ones and just see what's in the top, field, because I don't think, yeah, MDGL, all these are still trying to rebound right now. I took a stab at Rita, it didn't work out for me. This is a biotech stock, and it's holding pretty tight. I don't remember which day I got in, but I got shaken out a little bit. But it still looked really good. It's a really tight trading. Like it had this nice bounce. Rita, I have the story here. Rita, do I have it? Maybe I don't. I thought I did. Let me search for it. Okay, right here. It approved treatment for Friedreich's ataxia, neurological disease that cause progressive difficulty walking. So that was the news, okay? So it jumped right here, and then now it's holding really tight. So I'm surprised how tight it's holding, especially like it's riding the 10-day right now. It's really quite amazing. But obviously it's a biotech stock, and there's always high risk with biotech stock. Yeah. Let me see here. IQ doing. This is a Chinese stock, and I'm just surprised how strong this is. Like, there's something about, I don't know enough about this company story, but there's something about it. Like, this is a big run right here, and then it's like trading sideways. And it's getting, it's still below the 10-day. That's the only problem, but it's now at the 50-day. The 50-day has caught up, but it just won't go down much. That's what I'm seeing right here. This is a very tight base. Yeah. Health. There's a few health here. Interesting. Look at this. Health. A lot of biotech. Industrial is starting to weaken a lot, which is not good. Again, that's powered down. Energy here. Wind. Still in the top. Another energy. Okay, so WIPS is Chinese stock, retail internet. This one is doing really well. I have a position, short-term position on it. It bounced right here. Look at all these arrows right here. Every single day was a buy opportunity. It just won't go down much. And then Thursday, it moves up. It's still below this resistance line, so if it move above that resistance line, it will be really, really good. So ELF is a rebound as well this week. That's one of my core position. I just love how this stock trades. It's really tight. It did make a new low on last week, right? I think. Was this 13? No, Monday. And it bounced back since that. So now it's above 10 days. So this is true sign of strong leader. They fall below 21 day, 10 and 21 day, bounce back up. Some of them will hit 50 days, some of them won't. And this is the one that didn't. And didn't fall to the 50-day line. It just bounced back up. And now it's above 10 days. And just also the speed, how fast it bounced back up. That's also a very good sign. Just in a few days, it bounced back up. TGLS, I got shaken out this guy. I still like this stock, but this is in the industrial area. So like I said, industrial stocks got hit this week, and it's below 10-day now. It's unfortunate, but it's still a very strong stock. I would watch this. It's near 50-day. It has caught up to it, so I'm guessing it's gonna hit 50-day, just because it didn't go up to 10-day this week. So it's gonna hit 50-day, and maybe it'll bounce back from there. Exxon took a position in this. This is a lot of growth investors follow this stock. It's a securities stock. I don't really know what they make. Maybe some guns like Taser that we talked about earlier. And again, very tight. Look at all these arrows at the bottom here, meaning like it closed at the upper half range, and it rebound above 10-day. Again, I took a position. Friday, it gave back a little bit. So we'll see. ERJ, this is a new name. Aerospace Defense. So this is also kind of industrially, but this one is acting really strong. Look at this. It fall, and then it closed at the top,
then the next day it make new high. And like this trend is really nice. I like this trend. Like you can draw a line along the bottoms of the lows, and that would be your stop, right? If you want to trade really tight, and just let it ride this trend line. AMK. So I'm just surprised. There's some investment firms that are doing well. This is one of them. Because most financial stocks, related stocks, are down. So this one, it was down, but then look how fast it bounced back. Like super fast. Small cap though. Again, I don't hear anyone talking about this. But it's, this is like number 23, so it's very interesting. Cody, TRMD, TDW, MKTX. So I missed this guy. Like again, I don't even know how I missed some of this stuff. Like I have it on my list, but I must say, this one bounced 5 days in a row. I was so shocked. Yeah, this was the day. Look at this bounce. It hit 50-day, and closed all the way at the top above the 10-day. Like that's a classic buy signal. Yeah, I feel bad every time I look at this stock, and it just bounced all the way now, 5 days in a row now. So again, this one is in investment bankers, brokers. So there's a few financial stocks that are doing well, which is, like I said, very surprising, especially given these times. So those could be leaders, right, going forward. HLS, Nerds. I think Nerds gave back quite a bit. I think it's bouncing back now. So yeah, see, it gave back a lot actually. And it went all the way to 50-day, bounce from there. Again, a classic bounce. A little bit risky to buy there, but it is a small buy signal. And then the next day, it make new high, Friday. So now it's coming back to the 10-day. We'll see if it can pass the 10-day. That would be a better signal to buy there. LVS, BAT Thompson, Wing, like I was suffering from this one because I bought it when it broke on the earnings news, and this was the day right here, and then ever since it fall back, it never hit my stop because I set my stop like around this level here, and surprisingly it never hit that stop. It came so close to it, I think like within 10 cents or something, and then now it's bouncing like 5 days in a row, so that's good. Ropel really like this stock. I don't know why, but he keep talking about Wing. I guess he likes it. He likes their wings. 4. I took a position in 4. It's still very volatile right now. I like how it came close to its 50-day right here. Wednesday, it tried to test it that low, but it didn't like break it, so that's good. But it just couldn't move above the 10-day. Like that's the action I don't like. But this stock has always done that. When it consolidate, it just likes to consolidate around the moving averages, and that's why like this is one of those stocks you don't want to buy way above the 10-day because it always come back to 10-day. So we'll see. But I like how it it has kind of formed a bottom, at least higher lows. I mean, like in this scenario in the last week. So even though it hasn't quite really passed the 10-day yet, which I don't like, but MELI, yeah, this is another retail related stock. Yeah, same thing here. So these are the weaker ones, right? So you can see the techs are definitely the strongest one because they're all above 10-day, they bounce, and then most of them anyway. And then the retail like ELF and MELI and these guys are bouncing, but they're not as strong. Like Wing, they're bouncing, but they're not like above the 10-day. Some of them, right? And then same thing with like 4, yeah. So like Pen is another health stock. So this group is really strong. Medical product this week. I don't own any of them, unfortunately. But If I go back to the diagram, was it here? Okay, maybe Friday it gave back some. It's not on this list anymore. Yeah. Probably Friday it gave back. But I think Monday to Thursday they were really soft. Because one of the stock got replaced by Pod, which is I think it's called Insulate, the company name. And yeah, they were replacing one on the S&P 500. I don't remember. Was it SVB they're replacing? I can't remember. They replaced one of the stock, and this jumps on that news, and it looks really good. See, this is a long-term resistance line. It broke out, and then it pulled back a little bit below that line, and then now it's near the top again. So that's really good. Yeah, medical products. So Pod is one of them, and then this one, Pen. There's some news about Pen. I don't know if it's in here. Yeah, right here. Removing blood clots, right? And they have like a few methods actually, and they all seems to be working. So they're definitely a leader in that, which is really huge. If they can remove blood clots, that's huge, right? So, yeah, and look at how tight this is trading. I like crazy tight, and it's on a nice uptrend, and now it's like trading really tight. 50-day caught up. 50-day caught up. It went below it for one day, and then second day it went a little bit down, and then closed all the way near the top. Now it's above 10-day. So this one is very interesting too. Oh, you know what? I took a couple of positions in health stock, which is none of this, which I wish I did. Pen and Pod, those are two really strong ones in the medical products group. But there's a couple other ones. Let me see. It should be down here maybe. It's a little bit farther down. Okay, LNTH. What does LNTH do? I don't even have it in here. It's been a while since this thing came up. So these two stocks went through a big correction, but now they're coming back up. So so here, you know, see this, like, well, I mean, this guy seems okay. It's actually not a big correction. It's still on the uptrend. Yeah, Thursday it bounced. I don't remember if there was news. Oh, it's earnings news. Yes. So it confirmed this has huge earnings. I can't show you right now on market space because it's not working. But yeah, it was a superb earnings. It's triple digit. So this guy has triple digit growth. One of the few ones in the medical area, health area, and yeah, really strong. So I decided to take a long-term position on it. Oh, this is medical products too. So it's in the same group as the two I just mentioned. All right. And then the other one is shortwave. Again, this one is the one that went through a big correction. There you go. So this was the leader last year at some point. And then it went through this really long consolidation, going sideways. And what I want to show is how tight it's trading right now along the moving average in the last month or two. And then, so it's no longer going down, and you can see now the moving average is starting to curve up. And even the 200-day is still not going down yet. Look at that. It's still, like, this is one of the leaders last year. It's still going up. It's crazy. And 50-day is starting to turn up. And you can see Monday, Tuesday, Wednesday, Thursday, Friday, like it's starting to move up. And Friday, look, it didn't even came back to the 10-day. So there's some sort of accumulation happening. Volume seems to, there's one volume here, two bars long, high volume here. Even Friday selling was, again, anytime on the day that's down, it didn't hit new low, I don't really consider, especially compared to previous day, I don't consider those selling volume. To me, that's more of a neutral thing. So this is, you know, some sort of accumulation happening in the last 2 weeks. And like I said, you can see it clearly on this bounce here. So maybe this correction is finally done. I'm taking a risk right now getting in earlier. But, you know, we'll see. We'll see if it finds resistance. If it does bounce, we'll see if it finds resistance at the 200-day line. Yeah, this is way down. This is 393 right now. But like I said, it used to be a leader. And again, they have pretty good earnings, I think. I remember. Yeah, again, I can show you the earnings. But So I took, like I say, I haven't bought a health stock in a while, and I'm seeing some strength in health stock, which is interesting. Not a lot, but there's some. That's it for me in terms of the stocks I'm looking at. How about you? You anything else you're interested in?